Do you think ETF flows are a good trend indicator for anything?
They're great.
Sometimes I get confused by them because, frankly, sometimes I don't think they tell us much of anything, and sometimes it seems rather significant. It's enlighten us.
Flows can be emotionally driven. We know that. The stock market can get emotional. At the same time, I think the key thing here, Bob, is most money is managed by people, either advisors or people who have a lot of money. People who have a lot of money tend to be older. You and I talked about this earlier.
Why are you looking at me?
If we're a little bit longer in the tooth, we've got more of an allocation.
Now you're really annoying me. You're pointing to me and you're saying long in the tooth.
We're both boomers, so
very sensitive about this.
And with that in mind, you have more of a balance, maybe a 60-40 portfolio. You talk to advisors, they're not concerned about the volatility in the equity markets as they are as far as rising interest rates and what inflation's going to do. And you look at that fixed income portion, if your client is close to retired or retired right now, the outlook for fixed income is pretty bleak.
Yeah, but I want to go back to the question. I want to talk about this outlook in a little bit, but the trend right now, what are we seeing in terms of flows?
A couple of things. We have more money going into commodity-based ETFs than we do in U.S. fixed income ETFs here today. That alone is crazy.
They're following MEB around. That's what they're doing.
They are. And then also, as far as what little inflows we're seeing on the equity side, we're seeing huge outflows in the S&P 500-like ETFs. And why is that? It's because they're jacked up on FANG stocks or Microsoft or Tesla that are doing so poorly compared to the major index. And if you went into like an equal weight, RSP, that Invesco equal weight ETF, just today, for the first time, it went down double digits. It's only been down single digits so far year to date. Because the broad market...
You're talking about flows.
We're talking about performance, but also flows are down a little bit. Most of the outflows on the equity side are coming out of the S&P 500.
And bond funds, though, since the beginning of the year.
Bond funds, very, very small. It's net positive, but it's less than $20 billion.
This amazes me. You know, at your conference, I mean, people were saying 70-30 or 80-20 is the new 60-40, and we're still not seeing big outflows.
No, but
bond funds.
There's a record amount in cash in money market funds, record amount in short duration. People are taking their marbles and they're going elsewhere.
Okay, I want to talk about that a little bit later. But just speaking of flows, Kathy Wood's ARK Fund, I did an interview at your conference with Kathy Wood, and she marveled at the fact that she has a very loyal following, and it's amazing to me. There was 190 million shares outstanding in April of 2021. There's still 190 million shares outstanding. This is buying the dip here. People want to say, not trend investing. She's saying now, you've got to stick with me 4 or 5 years. But it's remarkable how loyal her following, down 60%. And still no outflows.
If you believe in her premise, if you believe in the game plan that she's got in place, and you could buy her for 60% off compared to a year ago, and you've got time. Again, I'm not going to talk about the age much anymore, but my kids are in their 20s. I keep telling them, push into Kathy Wood, because 5, 10, 20, 30, 40 years from now, not saying you and I don't have the time, but boy.